All right. Well, thank you to everybody that is here. We're going to be recording this session, and we'll have the recording up within the next couple of days for everybody to listen. So, first, we're going to start actually with Niels because he is in Europe and it's ridiculously early in the morning for him. So, we're going to let him talk a little bit just about some of his favorite things that he looks for when he's trading. Um, and we'll just kind of all chat about some of the different things and discuss some of the setups for you so you can see some of what our mindset is when we are going into trades or exiting trades. There is nowhere to leave any questions for this chat. We are going to be posting some things in the events broadcast section. So you can open that text channel up so that you can see when we're posting charts and things like that. So, Niels, take it away. Tell us a little bit about your style and what you do.
Yeah, cool. Hi everyone, Niels. You might have seen me in the channel sometimes. I'm gonna keep it quick because I actually kind of want to go to bed. But so in my style of trading, whatever time frame that is, whether I'm swing trading, day trading, scalping even, uh, I tend to do a lot with horizontal support and resistance lines. That's basically the foundation of what I do. Um, I just drew out like an example real quick on the Ether USD pair, which I'm going to share in the broadcast channel, kind of to see, let you guys know how I go about things. So generally, like I do the higher time frames first. This is like the monthly chart on Ether USD. Um, if you take a closer look, you can uh, kind of see how it works. If you have more questions about like how horizontals work and how you can try and practice them, then hit me up after. That's not really what I'm looking for to explain right now. But as you can see, price reacts heavily to these levels. This is my higher time frame, and then I kind of zoom in. I go to my weekly and my daily. So the upper, I did this in hindsight, so take this all with a pinch of salt. Although these zones usually stay on my charts for a very long time. Um, so I kind of zoom in and then like refine the entry or exit area a little bit uh, more closely because there's still some wiggle room in a way. Wait, let me show you the daily chart. So basically, after having set the foundation, you see the red zone. That's like the daily zone, the bullish zone where I would be looking to go long. Um, so when price actually arrives at these zones, because there could be many more zones, I just put like a small example up here. When price comes to an area where I think price will like either reverse or like where I feel I can go long or short in these like highly volatile, highly active areas, as I call them. Like either price breaks through with like lots of momentum, or they reverse and in those areas, like price doesn't move out of nothing really. So when it comes to these areas, like how do I determine whether I think the area will provide support or resistance is usually looking at divergences. I think it's very well. You can do it in all time frames. For this specific example, as you can see where price hits the red zone, I would have been looking at RSI and an OBV oscillator, and I will be scouting for a possible bullish divergence that would form within that area, giving me the hint like, okay, the support area is going to hold. So I'll show that right now. So as you can see, within the zone, price reaches this support zone. Um, and RSI and the OV oscillator are the only indicators I actually use for divergences, and solely for that matter. And as you can see, whereas price is making lower lows, uh, the RSI and the OBV oscillator are making higher lows, which is a regular bullish divergence, giving me confidence that hey, this support zone is yeah, it's actually going to hold. And as you can see, it did hold and it runs away. I mean, I did this in hindsight. I actually didn't probably had it charted out somewhere, but just for clarification, I made up a nice example here for this chat. So yeah, basically that's all it. Whether I want to go short or go long, I just chart out my horizontals, my likely zones for reversals, basically. And once price approaches, I look for divergences, whether that's on the hourly, if I'm day trading or whatever, or on the daily, if I'm trading larger swings. Yeah, that's basically how I do it. Thanks, I guess.
Thanks, man. Thanks for sharing some of that with us. So now there's going to be lots of different styles, of course. We each have our own kind of unique things that we look for. So if you have questions about some of this stuff later on, we can talk afterwards. But for now, we're just going to kind of chat about some of them and share some in the events broadcast area, so that you can take a look at what we're looking at. I can talk about one of my favorites real quick. As to, to Neil's ire, I do like to use the Ichi Cloud, and I have kind of my own custom setting that I use for it. But there is some amount of choice that goes into what settings that you use on the Ichi Cloud. You hear a lot of people here talking about the 20, 60, 120, and 30 settings on the Ichi Cloud. I do like to use those sometimes. My version of that is 10, 59, 120, 30. So it is also a more conservative Ichi setting, but for me, it just gives me faster calls for things, faster notification that something's going to happen without giving me too many false signals. And then default also works. A lot of people are using the default. You can trade using the default. And for coins that are too new for the conservative settings, I do use the default just to gather some information. But for me, no indicator is something on its own. It's something that I look at, and then I look for confirmation from other things or from multiple time frames. Now, one of the big things that I look for with the Ichi Cloud is the TK cross. Now, the TK cross is when the Tenkan and the Kijun lines cross. The Tenkan is the blue and the Kijun is the red. And when price action is underneath the red cloud after a long retrace, especially on the daily time frame, when the Tenkan line crosses above the Kijun line and price action is above those lines, that is like a God indicator for me. That's something that, strike rate on that is 90% or higher for that pattern, especially on the conservative settings. So, and I'll post a chart for you here in events broadcast so you can kind of see what I'm talking about. But it's also a very powerful indicator on the 4-hour time frame as well. Now the issue is you'll hear people say, well, if the TK cross happens below the red cloud, it's not as powerful, and that can be true in certain circumstances. But after a long retrace, it is a very powerful indicator for me personally. Now, if you get a TK cross, the Tenkan crosses over the Kijun above a green cloud, that is also an extremely bullish signal. The opposite of these things is also true for bearish signals. So if you get the Kijun crossing across the Tenkan, that is typically a fairly bearish sign. And that's a sign that I use on some of the higher time frames to exit a position and reevaluate. But let me pop a chart in broadcast for you just so you can see what I'm talking about. Yep, go ahead.
Before I go off, because I'm about to go off here, but I think it's, as a general disclaimer, I think it's very good to know for everyone that no indicator will tell you everything. You should always have to either combine indicators, combine price action with indicators, combine horizontals with indicators, whatever. And also, you can be profitable with like really anything, in my opinion. It's
Don't
just
worry,
a matter
Niels.
of
That's like literally all I'm going to talk about. You can go to bed.
exactly. It's just all about practicing that thing and actually getting to know that thing. You're not gonna get there by, hey, oh, I now know what an Ichi cloud is. I'm gonna trade it and gonna be a millionaire, right? If it
Right.
was that easy, everyone would be a millionaire. It actually, for me, it's all about, hey, practice, practice, practice. Get to know what you want to do. Make sure you develop your own setups, right? Develop your own setups, trades you normally like to take. Record them, put them down in a trading journal, and eventually see what the strike rate about it is. So like that you can, in hindsight, see, okay, this is actually working or not. So I think those things are very important. So I'll just leave that as my end note.
Absolutely.
Good luck with the check, guys, and I'll see you all in a bit.
Thanks, Niels.
Ciao, ciao.
So what I'm doing here in the broadcast channel is I'm just posting a couple different versions of this, the TK cross, so that I can show you. The first one, the top one, was the bearish cross after we topped out last year, 19,000 on BTC. And you can see where the price action was when that cross happened. Now, of course, if you were following this kind of strategy, you would not have exited at the top, but you still would have gotten out at a very good price point compared to where we are now, if you waited to get back in until those lines recrossed, because that actually just happened a few days ago. The lower picture there is a weak bearish TK cross on the daily, and price action came down. But when the bearish cross happened, the price action was already low. And as you can see, it just bounced down a little bit. Then that bearish cross was invalidated, and we got a very strong bullish cross on the daily above the green Ichi cloud. And that didn't change until that top picture. So you can see where price went from one TK cross to the next. That's how powerful of a trend indicator that Ichi can be. Now, one of the things that I look for when I'm playing with Ichi clouds, of course, is entries, and I do use the Tenkan and the Kijun as entry points. So I'll put orders on those depending on the trend, whether I'm selling short or whether I'm buying long, and I will try and confirm the trend with other indicators, including the RSI and the CMF. That's one of the big things that I look for.
Okay, so I'm going to start from the very beginning, like choosing a coin, like before you draw stuff or anything like that. So the first thing that I look for when I'm, let's say that I'm scrolling through random charts. What I'm going to look for is a coin that has clearly been trending upward in at least the midterm, if not the long term, but has recently retraced and at least visually appears to be resting on some sort of resistance. So let me grab a chart here. This is a coin I picked out about half an hour before the start of this. So this is very up to date. All right, so this is MadeSafe. If you hadn't heard of it before, don't worry. I hadn't really either. So what we see here is that over the course of pretty much all of April, this coin has been trending upwards. It made a high, and then for the last 10 to 12 days, it has retraced down and appears to have found some sort of support. So let's zoom out now and see how the entire chart looks, because as you can see, this is a pretty low point. So while we're looking for like a more short-term entry here, not a bad entry for the long term, at least by appearance. So that is a good sign. But there's not really any use in opening a position if we think that it's going to retrace more than it already has. So the first thing we want to do is grab VPVR, which is volume profile visual range. It's one of my favorite tools currently for finding out support and resistance levels, horizontal support and resistance. So let us take a look at this. Okay, so all right, so VPVR zoomed out over the entire chart is going to allow us to pick the major points of historical support and resistance for the market. So what VPVR is showing us is where the most trading has taken place at which price points. And trading tends to take place near or at support and resistance levels because it's either there's a breakthrough going on. I want you to imagine price hitting a sell wall. The sell wall, sort of, all the trading that takes place in the sell wall being burned away, and then price lifting up above the sell wall and then falling back down to the resistance, now support, and sort of consolidating right there above support and continuing to trade in that range. And that's why we see all this trading take place at or near support and resistance levels. Sorry, technical difficulties. Can someone talk for just a second? I need to change my push to talk button.
Yeah, no problem. So, I mean, part of what he's talking about here with the VPVR, this is something I like to use as a secondary indicator as well, just to kind of tell me if I'm looking in the right locations for entry or exit areas. Because when I'm looking at price action on the chart, I want to know where the most buying or selling has happened. And that's something that the VPVR can really tell you.
Okay, problem solved. Can you guys hear me?
Yep.
All right, so these are the obvious places where there are lines of support and resistance. Where trading hasn't taken place, like at the very bottom of the market here, the reason it hasn't taken place is because the support was so strong that price didn't fall through there. So no trading took place below it. In areas where there are obvious gaps, those are places where price broke through resistance or support and then traveled so fast in the direction it was going that not much trading took place. So what we want to do is put the horizontal lines where we notice that there's a big change in the amount of volume that has taken place at those price levels. So right now, what we have in front of us is historically, these are the support and resistance levels for the market. And I want you to notice that a lot of these lines have confluence with, where price touched. At the top, you'll notice that that the market high hit a point of resistance. And that is, of course, but I drew these horizontal lines based only on VPVR. I didn't move them around after I just used Alt plus H. Hovered my mouse over where there was like a big change in the amount of volume, and then just dropped it. All right. So next, what we want to do is we want to take a look at more recent price action, because this gives us a good idea of the large areas of support and resistance, but that doesn't really help us with where our entry needs to be now, or whether or not we're actually sitting on a support. All right, so I'm just going to grab this. Here we go. All right, so this is the more recent price action, and you'll notice that the volume profile is different for this area, and that's because we're taking different trades into consideration. We're taking, in the first image, we're taking the entirety of all the volume for this particular market, and now we're just taking from December to now. So we see that that a lot of the lines that were drawn up above, these are still strong areas of support and resistance, but we'll also note that there are areas that aren't included here. That was sort of that was sort of invisible to us amongst all the trading that had taken place over the course of the market. Okay, so what I want to do now is put new lines of support and resistance from the ones that we can see that are more recent, if you will. Here we go. All right, so yeah, that is going to do it for this particular area. I think that there is another one right above there. Why didn't I include that? Oh, anyway, so this, as we can see, there is a gap in volume right underneath where we're sitting currently, and that lets us know that we are in fact resting on an area of support currently. It would be with the position that we are considering in this particular case. Remember, this is a random chart that this was like one of the first 3 charts I opened to take a look at. This is not rocket science.
Yes.
The sum of trading is a little bit difficult, but VPVR is not. So I've highlighted here the gap in volume traded at those particular price levels, and I think this is a great example because that area has acted not only as resistance in early March, but is currently acting as support. As we can see, prices bounced off of it several times. Currently it's looking like it's possibly in a good entry position, just based off of trend and support and resistance levels.
Nice.
So next, what I want to do is I want to open up some other indicators. I'm going to use the Fisher transform here, but lots of people have different kinds of indicators that they prefer to use. What I want to know is what's the upside potential? I mean, sure, if it's resting on support, but it looks like it's going to retrace even more, well, I mean, it could always fall through support. I mean, that happens all the time with price. So what are the odds that it's resting on support now and it is going to lift off of support and go up? Because like, why open a long position if there's still more downside to go? We should wait in that case.
Right.
All right, so the Fisher transform is an indicator. It was developed about 12 years ago. I won't go all into digital signal processing again like I did before, but basically it uses a mathematical formula to take price and change the distribution of prices so that it's easier to see where market bottoms and market tops are. One of the things that I love about this indicator is, I mean, just from looking at it, you can see that it's doing a pretty good job with almost no lag time on showing you where the top was and where the bottom was of the various ups and downs of the wave of the market. So this is showing us that at least on the 4-hour, we've just reached a recent market bottom and we're starting to turn to the upside. So that's good. That lets us know that at least in the short term, we probably can expect not to see any more retracement, i.e. the price is probably going to go up rather than down, which is good because, right now we're considering whether or not we want to go long. So next, let's take a look at the long-term trend that we see on the Fisher. Are we at a market bottom? Are we in the middle of where the longer-term wave trend is going?
Right, and this is something important for people is that you can find these things on one time frame, but when you can find the same place, I guess, in the indicator on multiple time frames, that's going to be a much more powerful signal. Because if you're at a market bottom on the 30, on the hour, and the 4-hour, that's significant.
Exactly. Thank you. So let's take a look at the day chart. What does the Fisher transform say? Are we at a market bottom? Well, that looks like we are at least it seems we're not in a bad place to be. I mean, as you can see from the Fisher transform, price can always turn around, as we all know, no matter what any indicator says. But it appears that we're at a market bottom and that we have several more days of upside. On top of the 4 hour showing us that we have short-term upside as well. So currently, the position is looking like a good entry spot.
Yeah, and you've actually got a higher low on that indicator there too. So
That's a great point. I didn't really want to go into Fisher divergences, but
yeah, don't worry about it.
yeah, this is a great example of a divergence that's taking place while the market is bottoming out. The bottoms themselves are less bottomy, I guess you could say, if
Yeah.
that's how you want to think about it.
Yeah, and I mean you've got obviously from the last bottom it's a little bit lower, but from that, further back it's still an uptrend.
So in this case, I've hypothetically decided that what it's resting on support. It looks like there is sort of no place for price to go down to, and the indicator that I've chosen to use is showing me that that we may be looking at several days of upside. So in this particular case, I would set my stop loss below the blue area of support, and then I would use the previously drawn areas of resistance that are currently above price as potential targets for taking profit. Well, that looks like we are at least it seems we're not in a bad place to be. I mean, as you can see from the Fisher transform, price can always turn around, as we all know, no matter what any indicator says. But it appears that we're at a market bottom and that we have several more days of upside. On top of the 4 hour showing us that we have short-term upside as well. So currently, the position is looking like a good entry spot.
Yeah, and you've actually got a higher low on that indicator there too. So
That's a great point. I didn't really want to go into Fisher divergences, but
yeah, don't worry about it.
yeah, this is a great example of a divergence that's taking place while the market is bottoming out. The bottoms themselves are less bottomy, I guess you could say, if
Yeah.
that's how you want to think about it.
Yeah, and I mean you've got obviously from the last bottom it's a little bit lower, but from that, further back it's still an uptrend.
So in this case, I've hypothetically decided that it's resting on support. It looks like there is sort of no place for price to go down to, and the indicator that I've chosen to use is showing me that that we may be looking at several days of upside. So in this particular case, I would set my stop loss below the blue area of support, and then I would use the previously drawn areas of resistance that are currently above price as potential targets for taking profit. So let me show you what that's going to look like. All right, so what I've drawn here is this is an entire hypothetical position setup. So we see prices resting on support. We see there is one line of support above us that price has sort of breached once and then it retraced. It fell down to support. Someone did a test pump of volume. Price didn't go through resistance. So that is where we would either want to do a breakout entry, or maybe if we were doing like a short-term day trade, that could be our target for take profit. But the other levels of resistance above that are the potential take profit levels. And then I have a larger zone of resistance above that, that if you look over to the left on the chart, you'll see that after price fell through back in, after price fell through in February, price attempted to breach that resistance level over and over and over and failed, and eventually fell down to the the market low that we've been in for the last 2 months. So we all know what happened in February. So, yeah, so this is an example of how you can use just one or two indicators and map out an entire potential position from start to finish.
Nice, thank you, man. Who wants to go next? Tilt Sass?
I'll go.
I'm finishing up a big and boring chart, so I'm gonna go first.
That's perfect. I wanted to go also. I'm a little bit different than everybody else. I do some of this day trading depending upon the setups, but I like to know the coins I'm getting into. I pay a lot more attention to the fundamentals. Not always. Sometimes I'll FOMO in when one of these guys are talking about a play, or if I'm just trolling through and I see something. But most of the coins I invest in, I at least have an idea of what they're for, other than just the charts. And not saying these guys don't, just that's what I tend to look for more. One of the things I also do is I look at CoinMarketCal, not app, but Cal, and I try to get an idea of what's coming up, what are the potential setups coming. Posting a chart there. I just picked some of my bags that I'm looking at, and you can see I discount the fire ones. If I haven't pulled up, but you can't see that underneath the name, there's a little fire symbol. So somebody that put that on there thinks that's an important one. Some of them aren't, like, and the ones like Tron listed at CoinTiger EX, nobody cares about that. But mainnet, there'll be a lot of FOMO for mainnet as it's coming closer to May. I mean, Tron's just been pure FOMO, so is EOS. But I look at those to tell me what's coming up in the near future and to start looking at charts to see where plays are. In addition to that, the other indicator I like a lot, which is a complementary indicator more than anything else, is just volume. I'm going to throw up a couple charts. The first one is, yeah, I have no idea what rate made safe is either. Yes. So that's Radar Network. That one, they actually have a driver tomorrow where they're going to announce how much progress they've made. They bill themselves as the best potential to fix this Ethereum capacity issue. If you look along the volume, you can see that it's almost none. In general, it's very low. Every now and then you see these giant spikes, which are somebody buying a lot. You look for these, not necessarily in this one, but you look for these in rows of nothing, and it's
Time-based
usually
volume?
some whale coming in and accumulating. Storm's a good example of that. Do a quick grab of the Storm chart, and you can see that there is a lot of flat volume. And then you see these giant spikes. So somebody really liked this and came in. Now, sometimes it's related to different fundamentals that are coming around at the time, but a lot of times it's flattened out and somebody's ready to make their position. So it shows there's some smart money moving around. And if you look at some of the bigger coins like XLM, it's just consistent volume. That's just people just always buying and selling, trying to get little pops out of it. Ignore the cup and handle there. I just didn't delete everything. But so those are the main things I look at. I look at all the rest. I look at the trend lines, seeing if things are moving in a trajectory. Laughing Monkey's been great at. He's a momentum trader. I'm sure he'll discuss it at some point or on his podcast. But he's made me look at linear regression, which if I have a good chart, I can just throw it on real quick. I'm going to pop up salt again. So even though, as you're going to see in a sec, even though salt has had a recent upswing, the overall trend is like drastically down. I'll let him talk about it, but I at least, he's not on tonight, but at some point, I at least get an idea of it. So if you see that on his chart, you have an idea of what he's talking about. But mainly, well, not mainly, but some of my favorite indicators are volume and catalyst, things coming up, things that give these altcoins a reason to pump. How you making out, Seth? You ready for your massive chart?
I was gonna write stuff up, but I can just walk people through it. So yeah, I can do it if you want me to go.
I can give you another minute. I'll
I
cover.
mean, it just occurred to me.
I'll cover one additional.
To write this up, so I may as well just talk.
Well, let me do one additional. At least we'll throw it out there. I'm sure somebody will talk about it more. Maybe, probably not tonight. This is just like a, hey, here's a real broad sense of some things we're looking at. But Fibonacci levels, Fibonacci's are real interesting and real powerful. I did a quick one on NEO, dragging from the top of the recent high down to the bottom of the recent trend. And if you're looking at it, you can see that the chart respects fairly well some of these levels. You can see at the 786 level, it was the end of an uptrend. Well, the downtrend, then the uptrend. It hit its head across the fib there and started its downtrend again. You get a little bit of a break at the 382. And then you bottom out, which I drew out at the 0. And then as you're coming back up, you wick up at the 236. You get a little bit of steadiness there. Then you bang your head again at the 382. So Fibonacci's, they don't always work out. And you try to, or at least I try to see, sometimes I go to the candlestick, sometimes to the wick, depending upon how the chart looks. Mostly I go to the candlestick. Seth disagrees with me. And it gives me an idea of additional resistances and supports. So in addition, you can see on this chart, I'm using the Ichi cloud to see when there's going to be that resistance when we're entering it, or the support if we're entering it from the top. And the fibs also give you a guide similar to the VPVR that we showed earlier. But those are some of my indicators.
Nice.
Okay, I guess I'll go. Okay, so first of all, my big thing is that I genuinely do not think it matters what indicators you use. I don't think there are correct indicators. I don't think there are incorrect indicators. I think you can mix and match whatever you want. Every one of us is going to think differently and understand price action in correlation with certain indicators, stimuli, whatever. And we will see things in ways that other people don't see things. The argument can be made that certain indicators are more robust than others, from a financial and technical analysis standpoint. I disagree. Primarily because if whatever indicator you use, you cannot get away from the geometry of the trade. So what I'm going to do is I'm going to walk you through the evolution of some price action for ICX here in the 1 hour chart, which is way lower than most of you will ever look at. But I want to highlight how in the span of gaining, I don't know, maybe 15% total gains, you could have, were you so inclined, made about 30% or so, swinging some of this shorter time action just on geometry. So let me share this chart here.
Certainly, my curiosity.
So I put this up. This is all just about consolidation, and again, I put horizontals here. I put diagonals there, all of those are good. But I mean, you can honestly do a lot of this by eye, and that's why I really, really like it. And it honestly, again, it doesn't matter what indicators you use, whether it be TDS, Fibonacci, a volume indicator, Ichimoku, whatever. All of that is secondary to the fact that consolidation governs all price action. So I started writing up something here and it got away from me. So I'm going to start from left to right with the first thing that's stuck out to me, which is a little bit of symmetric consolidation, where you see some wicks down, because symmetric triangles or symmetric consolidation, whether you want to call it a triangle or not, can break down or up. So in the case here, we see a wick down and a little bit of price action outside of the consolidation. What this means is that the bears tried to break this price down. The bulls pushed up, they fought back, and in the act of fighting back, you know, we sort of had development of this very high volume candle here, which then pushed it back into the triangle and then back out up. And actually, if you were to look down on a much shorter time frame, you would see that there is a strong breakout upwards, a healthy retest of that resistance as support, and then the price takes off. That is another thing that you cannot get away from. If you have a breakout and something goes straight up and doesn't retest the support, and it's not, you know, some FOMO coin listing or something, it's probably not going to go as high as you want it. But okay, so number one, we have symmetric consolidation. We go vertical. I'm not going to discuss anything about going vertical there, but we hit a peak. And as soon as we hit a peak and we start turning around, what I've done here is I've used a fib, which Tilt just talked a little bit about, but you don't need to. You really don't need to. It's just something I do. And you see that we have a turning point here right at about the 0.382 of this local price action over the span of a day and a half. When it turns here, these tweezer wicks become the second point of support. It goes up, bounces, we go down, we start consolidating in the traditional falling wedge. That's great. You know, I'm sure you've all seen this before. What happens next is very, very important, because the falling wedge is very bullish. So what's happening is, even if I'm in this trade, I'm looking for a breakdown upwards, because it's a bullish shape. I assume here what happened is there was a big BTC dump or something else, and the price friggin' tanks through. That's what stop losses are for. Again, we hit the bottom, we go back up, and we've seen the support turn to resistance. You always will see this. You can't get away from it, so you play it. Once that support has turned to resistance and you fail to break through, you know it's going back down. And at most, what you're likely to get is the start of a parallel channel. This goes down so far that you get symmetric consolidation. But I mean, right there, just by eye, that there's going to be a guaranteed, well, not guaranteed, but a very high probability 4% trade for me. Anyway, so that consolidates there, you know, semi-symmetrically. The price breaks back up into the falling wedge. I would not have erased these lines. These lines stay there with me, and I see that the wick hits exactly the extended top arm of that wedge. Just another confirmation that this is actually the right shape we're working with here. Bounces around in there, does a bullish break, a bearish retest, and then finally we get out of there. And when we get out of there, partly due to the amount of consolidation back and forth, the result is a semi-expected parabolic run upward. Now there was, what was this? This is the end of April. So this also coincided with some FA FOMO, but you can use that to your advantage, right? You say, okay, we've been low, we've been consolidating for a while within these well-defined shapes. We have a lot of volume, and there's an announcement coming up. I mean, to me, everything before the number 3 would have told me just keep buying and buying and buying and buying. That's something that comes with experience, and you don't need any other indicators to tell you that. You see healthy retests of the wedge, just keep buying. Anyways, parabolic trend ends the same way as it did in number 2. And what we get here is parallel consolidation, which is rarer than the falling wedge, but and actually, so not only is it rare, it's less useful. It doesn't tell you quite as much because that parallel channel, due to the nature of it being parallel, can hypothetically keep going all the way to 0. The falling wedges have an apex, and the apex is a very powerful point. Anyways, I'm ignoring that. We do a bullish break out of a bullish parallel channel. Good, awesome. Up again, the top of the run. Before we can even think about going further again, we have to retrace down. And how do we retrace down? Well, it's the start of a falling wedge with, again, the expected breakout straight upwards. Then, so there's some solid tan lines here. At this point, let's say April 29th, in my mind, those don't exist yet. So I'm gonna go on and I'll talk about them later. Again, we have some parallel channel downtrend with a bullish break upwards, a parallel channel downtrend with a bullish break upwards, a parallel channel downtrend with a bullish break upwards. Those are more than 50% plays, and each one of those is at least 3%, if not more, if some of them are closer to 8%. And selling at the top with the intent of rebuying at the bottom, I call it scalping, is a perfectly valid trading technique. And again, you don't need any of these indicators to do it. All you need is the geometry to know that it's going to keep going down until it breaks the plane of the resistance. And when it breaks the plane of the resistance, you buy back in. It's an incredibly simple idea that's incredibly, incredibly powerful. And you can follow this all the way down. And by the time we've had four falling wedges in there, what I've started to see is we have a really strong support arm there, that solid tan line. And we've had a couple of attempts at really getting the price up higher that have been rejected. You see these breakouts up at the top tan line are very big candles. They're big green candles. And that says to me that the bulls are trying to push us out of what must be another larger consolidation form, and they're getting rejected by the bears. And the fact that they're getting rejected so hard really sort of predicts the depth of these falling wedges. And this is getting on a little bit. I'm just sort of repeating myself. But once we've, over the course of the past, I don't know, what is this, 12 days, we've started to really build up the shape of where we are now. And we're getting into the time frame where a lot of the rest of these guys start looking at, which is the daily and the weekly or the 4-hour and these macro trends. And we started to form some nice horizontal support. We have a decently well-defined upper descending trend line, which is forming a descending triangle. So while there are a ton of calls of ICX being bullish, and honestly, I agree with them based on FA, from strictly a TA standpoint, what I see is we're nearing the bottom here. We're going to bounce up probably to somewhere around 47 or 4,800. And at the very least, unless I see a ton of volume, we're going to bounce there. As far as I'm concerned, we'll probably go back down, consolidate, and then go up. And I can look at nothing else but the geometry and a little bit of volume and give you an estimation of where I think there's going to be buys and sells for the next 4 days on the 1-hour chart. Am I right all the time? No, of course not. None of us are. And anyone who tells you differently is lying to you. But at the very least, I use this and I talk to the other guys and the other people on the channel, as we all do. And I set my buy zones, I set my sell zones, and we look at any place that, we line up with, if somebody's using the cloud or bigger fibs or TDS, whatever, if we have like overlapping areas, that says to me, that absolutely buy there, absolutely sell there, absolutely plan price action around that point. And this is something you don't need to really learn, in my opinion. You don't need to bury your head in a book or watch a million videos on, because there's nothing that can make the price action violate the fact that there needs to be consolidation. And where there's consolidation, there's profit to be made. And I guess I'll leave it with that.
Yeah, I mean, it comes down to the fact that all the indicators that we use are just averages of the price action itself. The price action is the thing that you are studying. So I think that yeah, that was great. So thank you for that. And that for those listening, you see Seth. He does a lot of day trading based on these ideas, and they are very powerful ideas. It's just like he and a few of us have said, it's not so important what indicators you're using as to are they working. That's what matters.
Right. And so I guess, sorry, if you'll forgive me, I'll say
No,
one
go
other quick thing about that is that the indicators I do use, because this chart is totally lying to you. I do use indicators. I'm just going to show you, independent of everything, how it all unfolds.
Oh, and I'm right all the time, by the way. So that was
Yes,
a lie.
he is right all the time. I use Stoch RSI, MACD, RSI, and right now I'm messing with the cloud and TDS a little bit. Now, a lot of people will say and have said to me that those are shit indicators and they're wrong and I'm dumb and I need to be using fucking, I don't know, some hybrid exponential system that was just released and you pay $500 for it. Whatever. I don't care. Because any indicator that you can use to find a pattern that is obvious to you, whether or not somebody else sees it, it doesn't matter. If you see a pattern and you can point to a number of times in the past where there's been repetition and defined price action that makes sense to you, doesn't matter whether you got it off a $500 indicator or something off the back of the cereal box, you can trade on it. So
Absolutely. Yeah, and if you, for those of you that are listening, if you go to the candle patterns channel in the education section, the one of the top links in there is the 5 most powerful candlestick patterns. Before there were any indicators, traders in Japan used to trade rice, the rice markets, using only candlestick patterns. And those 5 patterns have a strike rate, all of them over 80% when you can correctly identify them. So Seth is right. Like you don't necessarily need any specific indicator. It's what works. You have to figure that out, what works for you and your style. And does anybody else want to go? They have some things they want to talk about.
is that all?
There's
like 7 of us in here.
Yeah. Hey, Wellbear, I see you're in here. If you want to chime in, you're welcome to. ZC, you got anything you want to add? All right, I have another thing I want to tell you guys real quick while we're here. And actually, since Seth mentioned it, I do also use a MACD indicator. It's not the MACD indicator. It's a mechanical trading system based on the MACD. And it's just another trend following system, because for me personally, trend is the most important thing. Like that's what you need to learn first. Forget about a lot of these indicators and stuff. But first, learn how to identify trends on larger time frames. Because if you're trading on a 15-minute time frame, but you don't know what the trend is on the 4-hour, you're trading blind. You're just gambling at that point. And that's why you see in a lot of the charts that I post, like I let some of the other guys post, smaller time frame day trading stuff. And I'll just post some larger market outlooks for you guys, because that is extremely important for identifying the lower time frames and when you can enter and exit trades.
Okay, I turned server mute on for some reason. I don't know. Yeah, no, I think you guys are really covering it well. All too often, I think, especially with crypto Twitter, like I never really looked at crypto Twitter that much until I started, trying to make a brand and whatnot out of Whale Bear Man. But like you'll notice a lot of people start using the same indicators on Twitter. So like no one was using the Ichimoku cloud until 30K Moku started using it. I think if I remember correctly, but like the Ichimoku cloud was not something that a lot of people used. And like back in the beginning days, like people weren't really doing TA in crypto because it was such a new market. And I really think that, yeah, it's something that you need to learn how to do, and you need to learn how like your style and everything. I would say like far too often, like even one of the best things that someone told me when I started getting into the space was like, don't try to do it all with TA. Like don't be using a bunch of different indicators. Don't be like looking at someone else's indicators and then being like, oh man, I should really start using that. Like you need to master one indicator at a time, learn how it reacts, spot how each coin reacts to that indicator, because a lot of the times people like will try to use the same indicators for every single coin. And really what you need to do is figure out what indicators work best on which coins. So, I mean, that goes down the line once you master one indicator, but you'll find out that like, the like Zcash is a good indicator, is a good coin to look at, and figuring out which indicators are calling, the right moves, because you can back test all your indicators and then start fine tuning them. And I think that's like the best thing that I would tell someone trying to get in the space with TA is don't overload yourself with a bunch of indicators. Like whenever I see a new trader post on Twitter with like 4 different indicators, like all these fib lines and all this shit, like square one, learn horizontals and support resistance levels. Master that first, because that's going to take you a long, long way. I think that's, really what I have to say, because, I think you guys hit it on the head. Like, there's not one way to do this shit. Everyone needs to have their own style, because.
So I've just drawn those lines, and I'll tell you, I really like using magnet mode and then using the ray option. So where you normally pick a line, I pick a ray, and then I pick 2 points, and it draws the ray out for me, and that's why it goes through that candle there that you see on, what is that, March 3rd, and then through the 6th or 7th there. So if you look at this area, price came down, it bounced inside the Ichi cloud. That tells me nothing, though. There was no way I could have used the Ichi to really figure that out. It kind of bounced around where the Tenkin was. So, if you put some orders down there, then you would have caught some of those. But the place to enter this trade, actually, if you were using Trend and Ichi, would have been that blue circle. So you get the bullish TK cross on the 4-hour, right? You see it there. The Tenkin moves above the Kijun line, and price action actually came down. This is what Whale Bear Man was just talking about. A lot of people are using this Ichi indicator now, and this one is my own version of it. But I've changed some of the settings a little bit, but still you can see price came back down below it. That was a bear trap right there. We got the bullish TK cross. The price came down, so people figure, oh, okay, it's a fake out, and they sell or they short, trying to play against it. But the cross really was real, and price action came down. It created a higher low, and then it bounced up. Now, you could have been buying that whole time if you wanted, or you could have waited until price action stopped and turned around and then started buying into strength, as Laughing Monkey was talking about. So then you would have started buying on that, small green or larger green candle after the final red one there. That would have been on the last day of February 28th there. But once you had that point, that's when you draw that ray. So, you couldn't have drawn that line before price stopped at that point. But once it did, now you have 2 points, 2 wicks or 2 candles, and you can pick the bottom one and you can pick that one. And then the ray just draws itself the rest of the way out. Now, as long as price action stays above that ray, you're still in that trend. The moment it goes below it, you exit the trade, and then you look for another entry. That would have been a nice little swing trade over about 3 days there. Now, you can see what happened is that price moved below it and then came back up and retested it. So you can always hold and see what happens and then exit at your entry if it does come down, but it's safer just to exit when that trend ends. And that trend ended right there because you can see what happened afterwards. It came up, tested, and then it fell down, and you didn't get to the bearish TK cross until price action was already down to the same area or below where you would have entered. So that's just an example of one trade. Now, if you look below, though, you can see the CMF. You actually had a lower high on the CMF on the higher price action. So that's a very obvious divergence as well. And you could have traded off the two things together, the fact that you were breaking the trend and getting a divergence right there.
If you don't mind, I'll say one quick thing about this.
Yeah, go for it.
For the exact same reason you just mentioned about you and Wilbear, man, mentioned about people sort of catching on to the trends. That's how I feel about divergences and hidden divergences and stuff these days, especially because I think it's one of the most misused indicators, and that it's an indicator of indicators. And if you don't understand the underlying indicator, you're super badly not going to understand the indicator of indicators. And I'm sure Elisa, if she wasn't in a meeting, would speak to this much better than I will. But most of the divergence calls you see are probably wrong, or if not wrong, so benign as to not matter.
This is the same with like cup and handles and stuff like that. People draw those patterns all over things that are not real. So.
Oh my God! If you don't mind me another minute, I want to rant about that too. But yes.
Well, yeah, that and like I think people just like the word hidden divergence. Like it's like a buzzword. Like, oh my God, I found this thing and it's hidden. Like, yeah, like they're like, oh, it's a super secret, but I found it. Like it's not really. Well, it goes back like so when everyone's using the same indicators, right? Like we were talking about, like if you were watching Nick Crypto Core's stream the other day with like Tone Vase, like he has his ducks in a row on his trade, right? Like his 3 things that he'll have to check off before he executes a trade. And that's kind of like why I do like Ichimoku, because if you do the checkbox of it for a bullish setup, like it ends up having a really great ratio. So like if you do the check marks on it, like the Ichimoku, because of the way that indicator works, it's using a lot of different variables. It allows you to follow those.
I'm going to look at like a cup and handle or a head and shoulders, or something that's going to play out over a week or a month or even just a couple days. You don't get to throw darts at it and call it like 60% okay, because what's going to happen is you're going to get dumped on by all the people who know it isn't a cup and handle, right? Because they're waiting for you to buy at the breakout of the top of the cup of something that isn't a cup, and when all the volume spikes up there, you're just going to get dumped on so badly. Just like head and shoulders calls that where 30% of the price action is outside of the band.
I swear, you're every other day I hear, oh, there's a head and shoulders forming. I was like, really? Because that's an awful lot of heads and shoulders that I've heard about recently.
Yeah. So if you're talking about a very complex geometry, that's something, number one, you want to consult with others, and number two, let me put it this way: for every extra turning point you need, so for Head and Shoulders, there's 1, 2, 3, 4, 5, 6, 7. There's 7 turning points you need to construct a Head and Shoulders, distinct ones. You should be at least 14, if not 21 times more sure that that's what that is. For a Cup and Shoulders, it's parabolic, which means that, limit of infinite turning points, I guess, but whatever. I mean, you should be really, really, really sure before you load up 50% of your stack, which you never do for one, but before you do something like that on the handle break, you're just gonna get dumped on.
Can I just like sort of tie this all together, and that pretty much every technique that we've talked about here is a way to either increase win rate or decrease the risk of your entry. That's what all of these different techniques are for.
Sit on the head. I don't know if anyone covered the alligator one, but that's one of my favorite trend indicators. So here's a trend following indicator. I like to use it on the 3-day and the 1-day, but it's really, really, really simple to use, and it's just 3 SMAs, simple moving averages. And you can see on that chart that I posted, early October would have been your first entry signal. Okay, so it's made out of 3 SMAs, and the jaw line is the blue line. The red line is called the teeth, and then the green line is the lips. So what this basically is doing is aggregating that data of those SMAs, and then it's allowing you to figure out when to enter and when to exit. But the cool thing about this is it's telling you when trend is strong. So think about all of these different SMAs, they're trend following indicators, and when all 3 of these add up and match for an entry signal, which you can see that green line's on top, the red line is in the middle, and then the blue line, the jaw, is on the bottom. So think about it, it goes in that order right there. So once you start seeing the green line start pointing upwards, you'll start seeing that red line go under it, and then that blue line is always kind of hanging out in the middle, but you want that as soon as it flips to the bottom, you have that entry signal there at 4,500, and then you get. So there's a few ways that you got to be careful with this one though, because you can see where it had this initial dip here where the green and the red line crossed, but it didn't close under the blue line. So you would, if you were careful, you would have started exiting when you saw that curve come down to the red line. That would be your first indicator that maybe you need to start selling some of your position. But it wasn't a full sell signal because you didn't go all the way under the blue line. So that wouldn't make you close that position if you're following this. You would have held on to about that 16 K when the red line and the blue line, they all got conjumbled up and crossed each other there. That means the alligator's back to sleeping. And then you don't have a full entry indicator there. Most of the time when you're using this, after it closes like that, you want to wait just a little bit for confirmation because they are SMAs. But once you get it closed that strong, you pretty much you're out. And then it just had another entry here, and it was a false entry on the March entry, but it was short-lived. It told you to close it right away. And then we just had our entry here most recently towards the end of April, where it was at, I think, like the upper 7-8. So, I mean, that's just a really quick way. I don't want to get too technical because I don't know how long you guys have been in this, but I can post a link about it. But it's really cool to use. I
I'm
like
actually
using it
tabbing
once
around
we
on
go
some
down
charts, which
a
obviously have to
huge
do a
bear
small time frame
spiral
on just
like
so you
Bitcoin
get
did, and then turning on
pretty
3-day,
cool.
because once you turn
Probably
on the
shouldn't have said
3-day,
anything.
it's a lot stronger of an indicator. It hasn't told me to enter yet. So the 3-day is just about to tell me to enter here. So if I were using this indicator right now on the 3-day, and this is why I like using 3-day, you can see it here when you pull up that chart. Like the first time since it told you to exit, these lines are telling you right now it would be an early entry here because the alligator is waking up from its slumber. This is my secret weapon, and I just shared it, you guys.
And the more you depend on the lower time frame, the more likely you are to get wrecked.
Yeah. Well, I think that let's probably wrap it up so that we don't have too much audio file for Blue to go through later. But we can continue talking in one of the other channels. We'll try and get this so that the recording has some of these visuals along with it so that you can follow along if you want to listen to it again. But thank you everybody for joining us for the Thursday night roundtable. We have some more events coming up this week. We have an event with Potato McGruff and myself actually on Sunday. We'll be doing a kind of ask us anything. So make sure you join us for that. And yeah, we'll keep doing this. It's going well. We're having a lot of fun doing it. So thanks for joining us, guys.
Yes, thank you all so much for stopping by this evening.
Yeah, for real. Thank you.